Are IPOs a good or bad investment? Well, the answer is yes and no. Stay tuned, I'll explain. What's up, you guys? My name is Hussein. Welcome back to the IPO Nerd, the best place to learn about new companies going public and how to invest in them. America's #1 IPO news channel. So today, I just want to talk to you guys straight up. We're going to go over this article from moneywusa.com that says 7 reasons you shouldn't buy an IPO. And I'm going to debunk these reasons, all right? So, because a lot of people think that IPOs still have a bad stigma to them. And I'm going to explain why they are good for some investors and bad for some others. So make sure you drop a like, subscribe to the channel, and let's get right into it. All right, so the point number 1 they have over here on this list is that average investors cannot buy at the initial price. Now, we know that this used to be true a long time ago, before Robinhood, Fidelity, and all these other companies came about with the IPO access. What you can do now is you can ask for a certain amount of shares from Robinhood or Fidelity or even E-Trade, some other brokers out there, and you can ask for a specific amount at a specific price. Now your order will either be filled or not filled, okay? But now we know that the retail investor has a little bit more control, a little bit more power on how much they want to buy. This was not the case before. Before, you had to either wait for the initial shares to become public and kind of like put in your bid, right? And sometimes you have what is called the IPO pop, and shares will go crazy above, you know, the estimated price. But that is not longer a problem thanks to, you know, companies like Robinhood and Fidelity. Now, the second point that they have in this article is that IPOs might underperform benchmarks. All right, this is true. Right now, if you look at Robinhood, most of the IPOs that they launched in the last year or so, they have absolutely underperformed. Looking over here real quick, we're looking at new. This one is, you know, relatively new, but it's still underperforming. Iris Energy, Brace, they're all in the red right here. If you keep scrolling down, I think the only one that's on the green right now is Sweet Green. But you got Backblades, Expensify, Nerd Wallet down 33%, Allbirds down almost 60%. These are great companies, guys, for the long haul, right? But in the meantime, they have been underperforming. Even Robinhood is almost down 65%. F45 Training, Marky Mark, Mark Wahlberg company, right? Down almost 19%. Duolingo, Clear Secure, great company right here, down 31%. So yes, in the short term, they do seem to underperform. But for the long haul, guys, I think many of these companies right here that we have 23 of them that actually been launched through IPO access with Robinhood. I think many of these could be good investments for the future. These could be good companies that right now they are not performing as well as expected, but in the future they could actually, you know, increase that bottom line, their revenue and all that. You have to understand the global political and economical factors are going to affect the sentiment of the market, especially with these new companies. You know, investors are very, very skeptic, you know, throwing new money into new companies that they're not very familiar with. But that doesn't mean that these companies don't have a great chance to increase the bottom line in the future and actually become the next Google, the next Microsoft, the next Facebook, and so forth. So these might be great companies. They have to prove themselves still, but don't count them out yet. The next point they have here is that emotion can trump reasoning. And this is correct. When you are a new investor and you're trying to, you know, that FOMO is real, right? Everyone is investing in this company. You don't want to be left out. Maybe you don't know much about the company, like Nubank, you know, that's a Brazilian bank. Maybe you don't know much about other companies like Duolingo and stuff like that. You just know that a lot of people are, you know, rushing into the market and investing in these companies, and you don't do your due diligence, and you just, you know, follow the crowd, right? If you're following the crowd without doing your due diligence, it could be very dangerous, right? So that's one thing that I do agree with them, that emotion can trump reasoning sometimes. However, in the last couple of years, investors have so many tools available to them through these brokers that they actually show you the S1, they show you different things, you know, about the company. You can go to Yahoo Finance, you can look for any balance sheet, you can look for any cash flow statements and stuff like that, income statements. So it's the job of the investor to always educate themselves. So this one, sort of truth, but boom, debunked. Number 4, valuations still matter. Well, it all depends. I mean, look at some of the PE ratios of some of these companies lately, like Tesla, you know, in the hundreds, and Amazon, and all these PE ratios that are out of control. So valuation matters to a point, guys, but the market is always forward looking, right? So we're always looking at the potential of a particular company to grow and expand. So valuation is not everything. So this point right here that they're talking about, valuation still matter, boom, debunked. Point number 5 right here they're making is that IPOs have little real world valuations, kind of like piggyback on the last one. That is true. I mean, we don't know until a company goes public, when they open up the books and the SEC look into the actual books, right, what the company, you know, behind the curtain looks like. Look what happened to WeWork. By the way, if you haven't checked out that Apple TV show We Crashed, you got to check it out. It's amazing. We never know what's behind the curtain, right? So that's why the SEC does a great job every time a company is trying to go public, into, you know, opening that S1, looking at all the financials, making sure that everything makes sense, just to protect you guys, retail investors, and even institutional investors as well. Point number 6 that they make is that research is important. Well, that's a given, right? You always want to do your due diligence and do research. You can look at channels like mine. You can look at other channels, IPO Market Watch. You can look at, you know, different channels that talk about IPOs. But the bottom line is, you have to be the one that has to be, you know, in the books. You have to be in the S1s. You have to be reading these companies S1 and educating yourself about these companies. People matter. Their CEO matters. The way that they conduct the operations matter. The funds availability matters. The cash flow statements matter. All this stuff matters, guys, because when a company's trying to go public, 99% of the time is because they don't have any money to grow and they're looking for new funds. And that's probably 99% of the companies that I cover in the channel. The reason for them to go on public is that they're looking for new funding, right, to continue growing and all that. But this doesn't mean that the company, just because a company is not profitable, doesn't mean that the company is a bad company, right? And I want to hammer that into you guys' mind, okay? So, by the way, if you enjoyed the video so far, make sure you drop a like, subscribe to the channel. If you have any questions, leave it in the comments, okay? I'm here to help you guys and share my journey with you guys every single week. And point number 7 that this article makes is that prices may tumble after the lockup period. That is true, okay, for a lot of companies. They do have what is called the lockup period, where it's 180 days of lockup period, where when you buy the initial IPO, you're not able to sell those shares until after 6 months or 180 days, right, of the lockup period. These lockup periods are put into place by the SEC, right, for security reasons and to protect investors like you and I. We don't want a lot of people coming in and buying shares at a certain price, very low prices, and then going to the second market or black market or whatever and selling these shares for hundreds and hundreds of dollars, you know, above the share price. Okay, so 6 months later, the shares will be released into the market, will flood the market, and that will lower the price of the stock, the share price. But that's just done automatically because there are more shares in the market. That doesn't mean that the actual company is a bad company or whatever. Look at Snow. They sold many shares to begin with, and then 6 months later, the shares became available from investors like Warren Buffett and stuff like that. But the price was much lower, right? So that's just supply and demand issue. That has nothing to do with the company being a bad company or a bad investment or anything like that. So that point right there about prices may tumble after a lockup period, boom, debunked. Not a good reason not to invest in IPOs. And that's my video for today. I hope you enjoyed this video. I just wanted to debunk these 7 reasons right here, because a lot of people are still afraid to invest in IPOs, but they forget that Netflix, Facebook, Apple, they were all IPOs at some point, guys. You know, every single company has to IPO at some point, right, to become public, to continue growing and all that. And if you miss out on the next Google, don't say I didn't tell you. Your friend Jose from the IPO nerd, right? So anyway, do your own research, guys. You know, that's just my opinion. I'm not a financial advisor. This is not investing in financial advice. All right, make sure you do your own research and let me know what you guys think in the comments below. As always, guys, if you like this video, make sure you drop a like, subscribe to the channel. But more important than that, make sure you take care of yourselves. And I'll see you soon.
I bring up the pain, Rick solves the mind. I make the market rain like acid rain. An investing channel you ever know, ya. I take your girl, your house, your money, leave you broke, son.